Hey everyone, welcome back to the channel. If this is the first video you've seen from me, please let me know what you think in the comments below. Also, if you enjoy the content, please feel free to leave a like by hitting the thumbs up button and subscribing so you don't miss any more videos. In today's video, we're going to discuss, if any changes at all, how I'm continuing to invest due to the interest rate changes and the Omicron virus. As we've seen in the last week, there have been some fluctuation in prices, particularly through tech stocks and stocks that rely or perform better with lower interest rates. So all in all, what I'm continuing to do is just dollar cost average. And you're going to hear that in the majority of my videos in the future. I'm not changing too much. All that's going to happen, and this is what I've been doing for the last 4 to 5 years that I've been dividend investing. I pretty much just focus on stocks that I'm down the most in, because the key to dividend investing is handpicking the highest quality and just best overall stocks that you're going to feel comfortable with, regardless if they go up in price, regardless if they go way down in price. Because the price can change dramatically without the actual business changing dramatically. So the fact Costco's down today, there's no way possible that I'm worried about Costco going down to $100 a share or anything dramatic like that. There's this 1.5% change to me is nothing. All it does is allow a cheaper buying point than yesterday. Obviously, this is still a very high valuation at $540. I'm not sure. I think the PE is close to 50. So this isn't automatically going to make me want to buy more Costco, but I'm not worried about this one bit. So the takeaway from this video, I don't know if any of you saw my first video, but I picked one ETF or fund that is going to be 20% of my portfolio, and that's going to be right here, XYLD. It's an S&P 500 covered calls ETF, and I have 20 companies that are each going to comprise 4% of my portfolio. So right now I'm trying, because this is at around a $54,000 valuation for the entire portfolio, I'm trying to get the other 20 companies to around $4,000. Apple's obviously way above that. But I'm just going to continue to add to whatever companies are at the lowest valuation or are taking the hardest hits. Because what I did, I selected 20 of what I see as the best companies in the entire world, and I'm completely comfortable whether their stock price goes way down or way up. Nothing really is going to change for me. So once you've done that first step and you've selected those stocks and those companies that have such a great moat or reputation that whatever happens, they're still going to make it to the next day, the next year, the next decade, price changes really just mean that you can get a better buying opportunity one day, or maybe the valuation at the moment's too high. So you check out the other stocks and you view what's red for the week, for the month, or for the quarter. And you just focus on building up what's low at the moment, so you always get the best price. And we're accumulating these shares at the best value, which in turn is going to create more passive income in the future. So all in all, I'm actually excited for the turbulence in the stock market at the moment, because I'm hoping that we can get some drops in stock market prices. But other than that, nothing too much has changed. I'm not selling anything. I'm extremely happy with all these holdings. And if you haven't seen all my holdings, you can check out my first video or my latest video on the channel where I go through all my holdings and ones that I've recently sold. But these are my 21 companies that I'm just going to ride with regardless of what happens to stock prices. My stock purchases this week, I put $3,000 or so into Microsoft. So now that's at around a $4,800 value. This is a company I've just meaning to build up. However, the price was way higher than when I initially purchased it. I think I purchased this around $150 initially. So now that it's over $300, I had trouble dollar cost averaging up. But that's just something you have to get over, because next year this might be $400, and this is a position I really want to build. So if any of you are feeling that way, it's better to just put money in, because I guarantee from Microsoft next year is going to be higher than $323. So that's just some pride you have to get over, if any of you are feeling the same way I did. And my other buy was, I put about $990 into XYLD, because I'm trying to get this to 20% of the portfolio, and it currently is at around 20%, but I'd like to get this to 20,000, and then I'm going to start focusing on other positions, getting them all to 4,000. So by the time I hit around 100,000, I have the right allocation that I'm aiming for. I wanted to make this quick video. Nothing's changing my theory to investing or how I'm going to continue to invest in the future. So I just want to remind everyone not to panic if there's some turbulence in the stock prices of your portfolio. Just pick the best companies in your opinion and buy them when they dip, because if you've done the research and it's a great company, it's going to survive. All these companies survived the pandemic, and now we're slowly recovering. We had a little setback with Omicron, but these are world-class companies that have already made it through the worst of this. So do the same. Pick whatever stocks you think are the highest class and the most defensible, and just whenever they dip, just buy more, and we'll keep on dividend investing and hopefully reaching FIRE if that's your goal, or just some additional retirement income, or maybe you want to live off dividends. Whatever you want to do, this is how we're going to do it. Let me know how you guys are investing down in the comments below. Again, please like and subscribe if you enjoy the content, and let me know what you want to see in the future, and I'll be sure to do that for you guys. I hope you have a great rest of the week, and I'll see you next time.